Welcome to Broker the Trader. I am a mentor I wish I had. Today I want to share something very profound with you so that you understand what is going on with Forex trading, crypto trading, and stocks, all the CFDs, shares, commodity, futures, bonds, metals, all the CFDs. I want to share something very profound with you today so that you understand how to trade and what is going on before you actually invest yourself in. Or if you're someone who's not new, you've been trading and you're making losses, you don't understand what's going on, I want to share something very profound with you which you might have actually neglected to understand at first place. All right. First, step one, everyone, when you're opening this platform, Metatrader 4 or 5, everybody who's going to be trading is going to be trading price. Everyone is going to be trading what? Price. And what is price? Price is a value. Price is a value. And who is responsible for giving this value? This value, there are many parties involved. I will say masses are the ones who are driving price up and price down. How do they do that? They do that because of what we call demand and supply. Now you understand. You have the background, the core principle of understanding what's happening with price. Right. The price, it's represented by the graph. Right? The price is represented by the graph. If you go to chart over here, you can see, and then go to chart. It doesn't matter what asset you're going to be trading. Now, this is the graph here. This is the price that is represented by the graph, which is this price here over here. You can see it here. We have the price, and then we have the graph, meaning that we have an analysis that we need to do in terms of understanding demand and supply. The demand and supply is the one that everybody uses to trade Forex trading. Everybody, actually the masses use it to trade Forex, or the people or the community in Forex trading, when I'm referring to Forex trading. And I want to explain some few basics here to understand what is happening with price in the relationship with demand and supply. All right. Demand and supply says that if there is too much demand, the price will increase. If there is too much supply, the price will decrease. All right? Okay. All right. So now we understand. This is a bit confusing when it comes to understanding it, but then I'll explain it in a more details. But now let's focus on understanding the graph. All right. For basics, we know that the graph, when it goes up, it's a buy. When it goes down, it's a sell. Right? Since now we can see here, it went up here and then it went down, which means this was a buy and this was a sell. And since we're trading Euro USD, what does it mean when it goes up? It means that remember, Euro is always one. It's always one. Let me just remove this one. Euro is always one. 1 euro is equals to what price? This is the price here. You can see, let's use the price of 1.08715. Everybody can see it. Sorry if you didn't see it here. All right, because my hand. But anyway, let's continue. So this is the price, meaning that 1 euro is equals to this price. In basic or in current form, the 1 euro, which is 1 euro, yes, 1 euro like that, is equals to USD, because this is USD, right? It's equals to USD in this format. I believe now you can see what's going on here. So this is the price of euro. Then now, let me give you some better understanding what's driving the price, this price of euro, of 1 euro, to actually move from this point to up. Since you can see here, we moved from here to this point here till up here. So let's understand why it is like that. It's because of demand. We'll put D and supply. All right. Demand happens in this way. If there are more buyers, which means there are more people who are buying the asset, right? Meaning that they are buying what? They are buying USD. All right, they are buying USD. So if there are more people who are buying or more traders who are buying, all right, I'm including every part that is involved in trading, commercial banks, central banks, hedge funds, all those ones who are the players who are involved. They are the ones who are driving the price to go up. So you can see here the graph went up. All right, okay. Then we will come to analyzing how we use the term of analyzing using the price, because everybody is trading using the price. Now let's move along this one so that we can understand what is going on with the buy here. All right. If there are more buyers, if there are more traders who are buying here, that means that there is more demand. Then the price will what? Will go up. All right. Okay. Then we have what? A buy. All right. If now there are more sellers, then the price will what? Will go down. So there is more supply, so the price will not go down. There is more supply. All right. So now we understand the basic term of what's happening here with the buy and sell. That's why it happens like this. Let's make another example for you to understand much better. Let's say you're person A, right, and there is person B. You are selling apples. You are selling apples. Let's say you have 30 apples. Just an example, right? You have 30 apples, and this is one individual, and you want to sell your 30 apples to this individual. All right, meaning that if you want to sell, you have more to sell. More to sell. You have more to sell. You have more to sell. So you have more to sell to what? One person. And this one person is creating only one demand of the 30. So that means what? There is less demand. And what the price will have to go down, the price will have to increase. This is actually in terms of understanding more the complex word, which is, we call it a trade surplus. It's a trade surplus. You will start to research the word, you will understand much better with what's happening with trade surplus. And if right now you have more than 30 apples, you want to sell it to one person just only needs one apple. So there is one demand. So meaning that the price will have to be driven down or drive down. But then this only applies to a specific time. This only applies to a specific time. That is why in forex trading we have the time frame, and everybody is confused on understanding it. If I tap here, you can see the time frame that we have here over here. All right. So if right now a person wants to sell 30 apples, meaning that they want to liquidate it, they want to exchange the form of apples to money, they will need, if they want to exchange these 30 apples using this price, and then actually they're expecting to make money, but then it's only one demand. So that's what the price will actually go down. Same as with the buy. Okay, with the buy. All right, let's say right now we exchange this one. Let's say 30, and then we move on to this one, and then say we have 30. All right, we have 30 people, or 80 people who wants to buy. All right, and then we have A here. This is A, this is B, and then number A has only one apple, not apples. Only has one apple. So there is more demand. There is more what? Demand. So the price will have to go down, meaning that there is less supply. And also here, there is less demand, more supply. So here there is less supply. So the price will have to go up, so that a profit will be made with the person who's actually have the apples, wants to exchange that. All right. So this is the principles of price. Everybody is trading price in forex trading, and there are many ways of trading price. Let me show you, because this one is just a theory for you to understand what's happening with the price movement. All right. Let me explain something here for you. All right. We have strategies. Okay. We have strategies. All right. Strategies that we have pure price. Okay. Pure price is using only your analysis. understanding that, okay, at this point we're going to be buying, at this point we're going to be selling. What are you using? We can use trend line. Okay, you can use trend line, which is you can use the double top or triple top. You can use this is the double top. You can use head and shoulders. Okay, there are many strategies that you can use as a pure price action. You don't need indicators. The word pure price action, it means that you are actually separated from the masses that uses the indicators. Indicators, I'm referring to this. For those who are new, this is the part where you can find indicators. You can just actually find any index at moving average and say safe. This is the indicators that I'm referring to, that you are actually expecting to see that, okay, here we are expecting to have a sell. All right, I believe everybody can see what's going on over here. All right, so these ones who are not using pure price action, they are actually looking to trade using indicators. Let me just name them. Indicators. We have indicators. We have robots. We have robots, which are EAs that are going to be trading on your behalf, buying and selling, analyzing the price to buy and sell. And everything that analyze the price will use the principles of demand and supply. Just like that. Everything that uses the price, everyone who's actually trading is going to use the price of demand and supply. So to make this lesson short, I'll have another lesson one so that you can understand more further and much better.